Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boisno with Kevin Casey, and today we are joined by Robin Kozelka with Acra Lending. We are going to get to Nonqm shortly, but in the meantime, we have a few other things to cover. First
Wait,
of
before
all,
we start going, the background looks different than normal.
what?
Where are
The
you calling
background looks
from?
different. Where
Oh
are
my
you?
God, that's
Where are you, Audrey?
crazy. I'm
Yeah.
in Rome. I am in Rome.
Rome,
Okay, so
Rome, what? Venice, Rome,
Venice is
Tennessee.
not a country, Kevin. Rome, Italy. So, okay, a little disclaimer up front. I'm here with 20 of my closest family members and like a crap load of nieces, nephews, parents, sisters, brother. Anyway,
And
they
they're
were
all
supposed
going
to
to be
be at dinner
traipsing
by
behind you.
now. They were supposed to be at dinner by now. And I was just explaining that the Uber system, everything here is a little different. And so apparently, the one of the many Uber drivers they called has popped a tire. They're not anyway. My bottom line is there's a whole group of wild animals right behind me outside. They could come in at any moment, and there you go. So I don't hear an echo. Do you
No,
hear an echo?
I don't hear an
Okay,
echo.
someone said they
You're
heard
a
an
little
echo.
echoey,
Anyway,
but
so if you remember if you remember last year when I was on a trip to a different place with my family and they kept popping in, even though they had been told to stay the hell out for an hour. So anyway, they're really cute. And if they do, they do. And if they don't, great. But here we go. We're going to go anyway. And yes, Kevin and I have done this show from all over the place. So yeah, of course I want to spend an hour with you guys. Mwah. Thanks, Jenny, for saying that. Okay, Wednesday, that's tomorrow. Fed meeting concludes. That's right. Our new Fed chairman is holding his first Fed meeting. That's a big deal, Kevin Warsh. So we're going to see what they say they're going to do. That would be tomorrow. We're going to come back to that in a minute. Retail sales is tomorrow. Pending home sales is tomorrow, and jobless claims are on Thursday. Okay. We are
got it.
currently, kids. We have a tentative Iran deal. They are supposed to sign it in Switzerland on Friday. I am close to Switzerland. I might just pop up there and
I think you
bully
need
those
to pop
people into
over.
making sure it happens. That's
Yeah,
right,
I think
right?
you,
I'll just
yeah.
pop in there and say, look, gentlemen, because God knows it's probably all men. Sorry, guys. We need this done and let's make it happen and make sure you sign on the bottom line because I don't trust them to do it on their own. This has been so dicey. We have a deal. We don't have a deal. We have a deal. We don't. Oh my God, please. So, anyway, with that being said, the promise of this deal has brought oil down to $77 a barrel.
Woohoo!
People, are you excited? I'm so excited. And the
It
10
takes
year
90
is
days for it to
down.
get here, though.
What?
It takes 90 days for it to get here.
Okay. But that, listen, glass is half empty. Good grief. I will say that, okay, where the heck is that? The gas nationally, where is that? It was at like $4 and 4. Oh, here we go. Average gas price in America. That's what I was looking for. $4.04 a gallon. Kevin, what did I tell you I paid right before I left the United States of America for gas?
I think you paid 679, if I
$6
remember
and
correctly.
87 cents.
I was off by a little bit.
I paid 687. And well, but also so that at national gas price, that's regular gas. I put special I love my car very much gas in mine, but still that's ridiculous. So anyone who is in a part of the country you're paying $4.04 a gallon, fall to your knees, thank God, and move it along and be happy you're not paying more. But hopefully we'll all be paying less soon. So fingers crossed. And then that whole Strait of Hormuz thing, then we'll see what happens with that because it's supposed to open. There's not supposed to be, like a toll plaza or anything, but you never know. So it's the usual, let's see what happens. Hopefully it all goes great. Thoughts?
Tons. Well, the first thing is, the straight. Why do they call it straight when it's crooked?
Really? Really? You think you're so funny, don't you? Okay, here comes somebody. Anyway, I don't know. I know you probably do you know this or not? It's spelled differently. Do you know that? Anyway, great question. Anything else besides that, Kevin?
No, I'm just waiting for these oil prices to start dwindling down. They have actually come down at the pump. My local gas pump has been and sometimes more expensive than yours over here. And now they've already dropped into the $5 range. So that's awesome.
Wait, yours dropped already
Yeah, it dropped last week
before the deal. Okay, so
before
they're
the
not
deal.
even
Yeah.
correlated at all.
I think what happened is they realized that people were buying their gas cheaper over the hill, so they decided to lower it down over here.
Oh, so it's your gas station. Got it. All right. Moving right along, we got ADP's weekly job numbers, and that was interesting because they came in at 25,500 for the job for the weeks ending May 30th. And a few weeks ago, they were at 40,000 a week. So they were lower. Then they went up to 40,000. Now they're back, they've moderated a little bit to 25.5 a week, which equals about 110,000 jobs per month gains. So we'll see what we end up with.
Not enough jobs. That's what we end up with.
Well,
But it's positive. That's more
I
better than
don't know.
negative.
I mean, we've talked to some labor economists, and the economists seem to think that the job growth that we have right now is pretty in line with what we need.
I'm gonna.
No, that's it. No comment. You're just
I don't think so. I like the economy. We're banging away with 250,000 new jobs a month. That's the right spot for me. But that's just me.
Okay, so someone's saying, would you advise to lock the rate today or before or tomorrow after the Fed meeting? And we do not give locking advice on this other than to say, if you see a rate you like, lock it in. I should have learned that in Italian, don't you think? Stand by. Maybe next week I'll get that down. Anyway,
That'll be interesting.
I have the same Natalia, I have the same dilemma actually because I mean, do we lock it in now? Do we
My,
wait? I mean,
my
who
my gut
knows? And
says lock it
so,
in on Monday or after the deal is signed. That's going to drive
well,
rates
okay,
down more than anything else than what the Fed says. Because the
I
Fed's
think
kind of they're not moving anything right now. They're wait and see mode.
okay. Okay. Hey, whoa. Hang on. That's your opinion. And it is the consensus. I mean, that is definitely the consensus is that the Fed is just going to stay the course and not. And we've also been told that Kevin Warsh is not going to be as chatty as Jerome Powell. So I don't know. We're going to see whether he gets up after the press conf and gives a press conference. I don't know. Natalia said, sing that song again. If you see a rate you like, lock it in. Okay. And then Peter would like to know why asteroids are called asteroids and hemorrhoids are called hemorrhoids. So yeah, those are great questions, guys. Thank you for participating. So Natalia, what I would do is if you know how this goes, we all knows how this goes, right? If you have a borrower who's really rate sensitive and it's going to kill your deal if you don't lock it, don't have it at a certain rate, then I mean, I'd be sitting on top of your rate lock thing and be ready to go. I mean, yeah, I don't risk it. It's so volatile, you know?
Yep.
Yeah. Yeah. All right. So, May housing starts and permits. So, starts were down 15% from April, which is interesting. Permits were right in line, but there's not a whole lot of new inventory that's going to come to market. But we have a high supply in a lot of areas right now that may or may not have been overbuilt when they thought there was going to be some big exodus to some of these places that was never going to stop. So anyway, keep an eye on that. But like, I'm not in a place where I've got a lot of new housing anyway. Are you guys?
No, I'm not seeing a lot of it. Although I'm seeing construction in San Francisco, more tower cranes, so that's a good sign.
Is
Uh,
that residential or is that commercial though?
it's a mix.
Really?
Yeah, it's a mix. But it's a good. Hey, I always follow the tower cranes, San Francisco, and when there's more than
Yes.
10 tower cranes, things are good. When things are less than 10, things are not so good in the mortgage world, and that's
These are
why I
very
always keep an eye
scientific
on them.
observations, people. So, and Kevin, please explain to them your observations about the carriers out, the freight off the
Oh yeah, when
gateway.
there's more, yeah, things are not doing so well when there's more than 15 carriers in the bay, and if there's fewer, then it's things are slowing.
Yep.
Just tell you, it's funny. You tie the economy. There's all these little things in the economy, little singles. Same thing with license plates, out of state license plates. That's a sign that more jobs are coming into your area. Also means it's summer too, so it's
Well,
kind of a little iffy in the summer.
okay, so I will say that I have seen a lot, and this is in the last couple months, not just like
Yeah,
recently when summer started. I've seen tons of out of state license plates. And so, and not just from like the Western states, I mean from across the country. So there are people moving around and
I saw it in North Dakota the other day. Like that's a rare one.
that's a real state. Are you sure?
I
I always
know.
thought that was, I
I
have
don't
someone
know
who
what
claims
happened.
to be
Yeah.
born there, but I don't believe him. So,
Yeah.
um, okay. So per the Fed, guess how much equity are, well, let's start with the market value of owner occupied real estate in the US is $49
Market.
trillion. That's an all-time high. If you take out the mortgage debt of 14 trillion, which used to that sounded like a lot till I heard that the values were at 49 trillion, we have 35 trillion dollars in home equity.
Wow.
Trillion with a T.
So
I
Elon Musk
know.
could
So
pick
that's
up a
great
third of
news.
it. What? How much of that can Elon Musk pick up?
I don't know. He's making $1 trillion a year now, I heard. So I haven't seen his
Yeah.
pay stub though. So I'd like to see his pay stub. Would you? I would love to see his pay stub. What does that break down? And how much of it is RSUs? I mean, does he get like a base salary of 6 grand a month and then the rest of it is in RSUs for
I
SpaceX?
don't
I
think
don't
he's
know.
coming to me for a loan though. I'm just pretty sure.
I am sure he's not giving to
Hey,
me either.
quick
But
thing on the rates. I
yes.
was just noticing. I was looking up the T-bill rate. So today we're at 4.48, give or take.
Well, okay, it depends on what coupon you're looking at. So I think I was looking at 5.5. I don't, so that's why they're off a little bit.
Okay.
From what, because I said 4.42 and you said 4.8. So go ahead.
Yeah. So
4.48.
but it can move that much in a day. So, but um, the high for the year so far, we're 6 months in, is 456. So we're not too far off the high right now. And um, the low of the year was 4.05. I think that after this deal is signed with Iran, that we may start drifting back down towards that 405. That's my thinking, my gut. That's a half a point in rate. So
Okay, excuse me, Mr. Casey, would you like to share with the group who you consulted to see what was going to happen with the market this year? Oh, I'm
you want
sorry.
me?
You started with the next 40 years. And then I said, why don't you check for the next 40 days? And
Yeah, so I just tracked for the year. Though I actually looked since COVID ended, we peaked out at 4.84 on October 23. I don't remember what was happening back then. Do you recall? Um, no, I don't recall anything happened
yeah,
back then.
which mess it was. Yeah.
God, yeah. But our lowest point last year was 3.7. So we have some ways to go on the downside. So that's a good
Okay,
one.
so I would just like to say that from a year ago, rates are better by 33 basis points.
Yeah, there you go.
From 1 year ago. So it's better than last year. And we still have high demand. I mean, really high demand. We got MBA mortgage apps and purchases week over week were up 7%. Refis were up 15% again. And year over year, we have purchases up 4% and refis up 20%. That is the rates had really popped up. The refis had really dropped off and now they're back up. And so it's really interesting to see how sensitive the market is to all these ups, these downs, so the rates do matter. But also, I have so many people who they just need a place to live. Their landlord offered them the place they're living in, they have options. And so, again, I mean, I love it when the rates come down, don't get me wrong. And I
Yeah.
want my clients to have the lowest rates for sure, but it's not driving everything. It's driving some of this for, I know, but
I
anyway,
mean,
so
I
that's,
have two refinances going right now, even with the rates where they're at. So,
yeah. And what's the purpose? What do people need to be doing that they're
uh,
refinancing?
just reserves for one, and the other one wants to buy something else, but they're going to pay all cash with it once they buy it.
Yeah, right. So it's really interesting out there, I think. So, Robin,
Hi.
Robin,
Yes.
hi. Oh, there she is. That was the on switch. She had got into shutdown mode as we're grinding through the economy as we do every single week. And then she's ready. All right. So we dragged you in here kicking and screaming to
Thank
talk
you.
about non-QM
Hate
living.
it.
Yeah, look at
I
her.
hate it
Look
every
at her.
chance I get, Audrey. Every chance I get.
I know. I know. We're really happy to have you. I needed somebody when because I never know what the internet is going to be when we're traveling. And so let me tell you, it's a little dicey in various parts of this house. So I found a spot where it seems to be okay. Someone who had said that there was an echo said that they had logged in twice, so it wasn't even this. So that's good. But I needed somebody that I knew we could just have a conversation with, and it would be easy, and they know their stuff. And so here you are.
Thank
So thanks
you.
for being here today.
Thanks, Audrey.
All right, so let's start with our favorite. Well, one of our, there's so many actually. There's so many non-QM programs. Let's start with DSCR. And for anyone who has been living under a rock for the last few years and he has just emerged or coming out of a long coma, why don't you just briefly describe DSCR and how that works?
Okay. I think it's important for you to say this, that it's important for us to say that your realtors don't know what a DSCR loan is. I mean, I
Still?
ask every single, yep. I ask every single realtor and almost none of them know. And particularly scary is DSCR. They ramble together some letters and they don't even understand the concept of it, which is really means to me that this is an opportunity, right? This is an opportunity for you to become more of a partner with your realtors is this DSCR loan because they don't even know that it's possible, a lot of them. So this is really what sets the independent mortgage brokers apart is the access to this product and others. But to explain what a DSCR loan is, I will say that it's basically a loan where we don't look at the borrower's job, we don't look at their other debt, we don't look at their income. We don't verify any of that. You don't even put it on the application. You don't put any of that on the application. The only thing we look to qualify is a rental income from the property. So a lot of people would say, oh, as long as the property cash flows, you're qualified. Now, definitely, there's a little truth to that. I tell a realtor this, if you've got 25% to put down and you want to buy an investment property and you have a relatively decent FICO score, we can get you a loan. And noticed I didn't say, a relatively decent FICO score. And I didn't say anything about whether or not it cash flows. And the reason for that is, for us anyway, if you have 25% to put down, I don't even care if it cash flows, right? So there's a lot of interesting things you can do with the DSCR loans, but basically, we do look at the rental income. The more, the better. The more rental income, the less money you need to put down. As little as 15% you can put down and the lower the rate will be to the borrower. But other than that, yeah, it's completely possible. So that's a DSCR loan.
Okay, so let's go back a little bit and tell them so they can tell their realtors what DSCR stands for.
It stands for a
Can you hear
debt
me?
service. Yes. Can you hear me?
Okay, great.
It
I wasn't
stands
sure.
for,
There's a
yes,
pause.
yes, yes, Audrey. It stands for debt service coverage ratio. So it's a fancy way of saying we're going to let the debt or the or we're going to let the rents cover the debt, service the debt essentially. So basically it's a great loan for investors. And I was just thinking about this the other day as I'm preparing for a presentation for some brokers, talking to them about what we really can talk to realtors about to set you apart from the banks. And this along amongst a lot of things are, it's definitely one of them. But a lot of times the realtors, I was thinking, the realtors really think of you go to the bank, and if that doesn't work, hard money. Bank, hard money. If it doesn't work, you run to hard money. And I've seen that over and over
Wow.
again where, you're used to this because you're an independent mortgage broker, you're non-QM all day long. But a lot of realtors, one time I actually asked a realtor, I was charging my car and I bumped into a realtor, and the realtor asked me, I asked the realtor, I said she was in Palo Alto, and I said, oh, what brokers do you work with? Maybe I know some of them. And she named three banks, three lenders. Realtors don't even understand the difference between an independent mortgage broker and a bank. And so that's one thing. So if that's the case, do they really know? They know, oh, if it doesn't work, I go to this guy that says, hey, if your loans don't work, you come to me. So there's actually people that might go to a private money lender for all their investor loans that we could have maybe done. And some of those private money lenders might have decent investor loans, but they're not as good as non-QM will be in terms of pricing or flexibility or loan amounts or anything. We'll do a DSCR loan to $3 million. That's very rare, right? So it's very possible to do. The pricing is excellent. It's a really good product. We could do interest only. We can do short-term rental
So,
income. Yeah.
Hank, so there are a couple of things. So number one, this is one of my grievances with the banks is they don't send people to someone else when they can't do a loan. So somebody
They just
walks into a
decline them.
bank thinking this will be the easiest place for me to get a loan because they're my bank, right? They know me, they have my money, and then they get denied and they don't think, "Oh, I got denied by this bank. I'll go check somewhere else." They think, "I got denied. I don't qualify
Yeah.
and I'm done." So it
Yeah.
is, I think your point about educating the realtors is brilliant and so, so, so important.
And
And so, yes. And I'm telling you, our chat today is very busy. We will get to the questions in there. But one of them is for DSCR, we don't need a 1003. And yes, we need a 1003 for sure. But I mean, you fill out the application, you leave the employment
you
blank.
leave a lot
That's
of it
what they
blank.
do.
Lots of blanks.
Yep. Yep.
And then also, just in case people, oh, I do DSCR loans, I know what I'm doing. Those of you who do DSCR loans, you're going to learn a lot from Robin today on how you can do even more because you're missing some things that Robin can do that no one else can.
You know,
So just going to throw that little
Okay.
tease
So,
out
Robin,
there. We'll get back to that later. But
that's great. So, Robin, what is a decent score? You said decent score. Someone needs to have a decent score for a first time investor refinance. So, walk us through the scores that we need and how that works.
well, I mean, we can go down to a pretty low FICO score, and you're going to kill me.
Give us a number.
It changes. I don't know. I think the DSCR is bottoming out at, I don't know, 620, 640. I'd have to look at the matrix. Maybe someone can glance at it for me. But, I don't get a lot of those, to be honest with you. Someone messaged. Um, but when I say I think where it ends up working out well and it ends up pricing well is if you're in the high sixes, low sevens, no problem, right? I think we can definitely go down to a 640. I'll have to check, possibly even less. But then as you go down in FICO, you're going to have to bring in more money. That's basically how it works.
yeah,
Also,
pay a
And
higher
your
rate.
rate goes up.
yeah,
Yeah.
drastically. Like I like to see it kills me when someone comes to me with like a 698 FICO score. I'm like, just work on get the score up 2 points. It's going to really help you in the rate. So yeah, can you do it? Yeah. Do you want to do it? I would put a little effort into that one, especially when you're close and you're on the border on those types of things. And as you get higher in the score, the difference of 20 points or 40 points on the FICO doesn't matter so much. As you get into the lower scores, it does start to cost them, but it's still possible and still probably cheaper than a private money loan. And it just shocks me every day when I find out people have private money loans on a lot of
Yep.
their investment properties.
And
And
then they're paying like 12% or something on that private money loans. Like, oh
it's
my
not
God.
only that, it's the upfront cost, but and
Yeah.
the short-term nature of those loans. These are long-term financing loans. These are loans you can stick with. Um,
Well,
so yeah.
I'm just gonna say, first of all, I haven't done a private money loan over 10% recently, and you can keep the upfront cost down. And the beauty can be if you don't, like if you don't want to, if you're going to pay it off quickly, you should do private money because in 4 months you're not going to have any sort of, it's not going to be an issue. So there are times, but you need to be discerning. And Robin, you are 100% right that usually, 100% of the time people should check out non-QM first. We also often don't have to get appraisals for private money. They'll take care of that for us. So there are some reasons and
Possibly.
some times, but definitely check out all of it.
Yeah, and I would also say is that they think that it might be a lot faster, and it can be faster, but we are, and it does differ from lender to lender, so you have to ask. But some lenders will treat a DSCR loan, they process it the same way they process the TRID loans. So they do the same waiting period. They make you wait for an intent to proceed to be signed before they'll let you order the appraisal. And those are all really kind of artificial operational decisions that they made. The reality is a DSCR loan is, and we should probably specify, it is a business purpose only loan. This is specifically for an investment property. You are not going to put relatives in. You are going to use this to rent to individuals, whether that's on an Airbnb, a VRBO, or a long-term basis. That's how that works. But because we recognize that this is truly a business purpose loan, and we do not need to follow any TRID waiting period. So what that means for the borrowers is that we can close a lot faster than even other non-QM lenders doing other DSCR loans. So one, DSCR loan's faster because there's a lot less documents. For us, for example, we verified the mortgage if you're doing a refinance on the subject property and their primary and an or a second home if they have it. All the other properties, we don't, we're not asking to prove their mortgage history or all that paperwork. So it's a lot less paperwork. It's a lot easier to qualify, but we can get a loan done literally on a DSCR because we're non-TRID. We can order the appraisal from day one, no waiting for an intent to proceed to be signed or disclosure to go out. And also, we can get these loans done. I mean, literally, we've gotten loans done in 5 days, 3 to 5 days, believe it or not. Obviously, those are probably fallouts from other lenders and they were ready to go and they had the appraisal in hand. But if you have the appraisal in hand, and I wouldn't encourage expectations of that, but we've done them very quickly. I've even done TRID loans in 9 days, but a non-TRID loan can close very quickly. And we like to say we can move as fast as you can. Generally, we're not the ones holding it up. A lot of times we're waiting for some things here or there, but it's handy. And I also like to say we will do, just to give people an idea, I'll do a rural, I will do a rural DSCR ITIN loan, believe it or not. So, I mean, it's crazy. We could do short-term rentals. We can do all kinds of fun stuff. Pretty
Let's
fun.
go to some of the
Why
things you
don't
can
you
do.
can
So you don't use the actual lease value. You guys will actually do a rent survey, and if the rent survey comes in higher than the actual rent, you will use that number over what they are currently even getting in rent. Am I correct?
Yes, there's two problems we can solve depending on the way that we look at it. So not only can we use the market rent, but we can use the higher of the market rent or the actual rent. So here's the two scenarios. The first scenario is you've got rent control. You've got a tenant in there. I live in San Francisco. There's a lot of rent control. And you've got a tenant that's been there for 20 years. They're not paying market rent, and you want this to qualify. Well, in that case, we can use the market rent, and that would be better than the actual rent. But we can also have the reverse, especially when people are doing short-term rentals or
Uh-huh.
VRBOs, or they're, maybe a long-term furnished rental, or they've really have a higher end property than normal. And they've gotten higher market rents. We can use we can use the actual rent. We need 2 months proof that that's what they've been getting, and we need that lease to extend for at least 3 months. I've gotten exceptions because I know in California they don't necessarily rewrite the lease every year. So in those cases, under those circumstances, we've been able to get around it with other documentation. But yeah. I mean, that just goes to show too that, like, non-QM's flexible as well. We want to get it as close to the guidelines. The guidelines are a guideline. You know, they're not an absolute prohibition from
so
doing something.
I will say that Accra and Robin are known for their exceptions. And if you have something that does not fit exactly the box, for goodness sake, call her. This is why it is so critically important to have good reps. I mean, and to know them. Because picking up the phone, don't just send an email. Get to know your reps. Make sure because they interface with the underwriters, they talk to their operations people, and they're advocating on your behalf all the time. So know who the good reps are, use them. They're more important than another eighth on the rate, which we'll get to that, Robin, with you too. but 45% of the non-QM market is exceptions. 45%. Think about that number. That's almost half. And it is, when you're doing conventional, a guideline is a rock solid in the, I mean, God help you if you ask someone for an exception. But in non-QM, it's not like that. And so this is where things, the old school, oh, compensating factors. And look, I have $8 quadrillion. And but yeah, my FICO might be a little lower, but that's okay because I have
But,
$8 zillion. We're quadrillion. And by the way, Dirk says that your minimum FICO score is 600, Robin, and he also said that you can have them.
I can, yeah.
So,
but another thing
We
about
don't do a
FICO
lot of that though.
scores, Robin, what FICO
Thanks.
score do you use when you have a
oh, great
couple that is
question.
applying for a loan?
That's a great question. Dirk,
It
which one
is.
do you use? I'm just kidding.
No, no, no.
I'm
That's
kidding.
from
Well,
Kevin.
most
No. I'm
LOs are
teasing.
all
I'm
used to
teasing.
going the lower of the two score, lower of the three, or middle of the three scores, lower of the two borrowers. But you do
Yes.
something very different.
Yeah. I mean, this is where it really matters that you call your rep. And this is a perfect example of that. I was literally on the phone with a client the other day, and they had me pricing out something with a 720 FICO score. And this is where DSCRs are super, super, super important that you call the rep. Because let me tell you, you move one thing and it moves other things. And sometimes I'll get a call saying, hey, I need a no ratio with a 720 FICO score, and I want it P&I, and I want a no prepay, whatever it is, right? And I go through the scenario with them, and it turns out that they have a 720, and your good rep will ask you questions back. So I'll ask a question. Are they the only borrower on the loan? Are there other borrowers? Oh, there are. What's their score? Oh, really? They have a 780? Well, guess what? Do they have any, as long as we don't show that one person owes the majority interest in the property, like if they're in an LLC where someone owns 75% or something, as long as they're individual borrowers and we do not see that one owns more than the other, then we can use a higher of the borrower's FICO scores. Most lenders are going to use a lower. So not only if you call the right lender and you ask the right question, are you might be competing with someone, and that other loan officer is going to be pricing that loan out at a 720, and you get to price that loan out at a 780 or an 800. And in this case, I think that score was in the 800 range. It was in the
Wow.
highest tier. And because of that, not only did that brings the PITIA down, right? Because a DSCR is like the rent divided by the principal, interest, tax, insurance, and HOA if it's a condo. And so now that brings that down. And then I look at it, and then a good rep is going to say, well, would they want interest only? Well, they don't want interest only. I said, yes, but if we use interest only, the rate might go up a tiny bit, but the payment will go down drastically. So I always price it. I tell people that it's like trying on clothes in a fitting room. If you're not sure if you're going to be a medium or a large, then you always want to try the smaller one on first. So when I price, a little trick about pricing out a DSCR loan is price it out assuming it's going to cash flow. And the reason for that is if you price it out with a one-to-one DSCR, the rate's going to be lower and you're more likely to cash flow, right? So you don't know if you put it in as no cash flowing, no kidding, you're not going to cash flow. The rate's going to be higher. So those are the little things that I can do. So you get me on the phone, and I'll say, hey, we can use interest only payments to qualify. So that can help you qualify. We can use a higher FICO score. That can help you qualify. Oh, by the way, I know that they've got a rent control tenant, but now we can use the market rent that's a little bit higher. Or, oh, are you doing a short-term rental? We can use the short-term rental income to qualify, which could be drastically higher. So there's all these little levers that I know to pull and all these questions that I know to ask. And so that's why please, please, please don't send me you can send me an email saying, I have a loan, I want you to price. No problem. But let's get on the phone and talk about it because there's situations. I priced one the other day for someone, and he's like, yeah, it's no ratio. And the guy had a 698 FICO score, and he was pricing a cash out refi at 71%. I'm like, he probably can manage to take $10,000 less out of his $150,000 cash out if he knew, because a borrower just knows what they want. It's up to the broker to just say, well, you think you know what
Yep.
you want, but did you know if you took 10 grand less, then that will bring you into a different pricing tier that's much more favorable. It could give you a better rate. And with that better rate, and if we add the interest only to it and we use your wife's score because she's got a higher score, then you're going to cash flow. We're going to have a better rate. We're going to use interest only payments to qualify. And, go ahead. They can make the P&I payment if they want to, right? To a
Yep.
certain extent, you can pay up to 20% extra per year, no problem, no prepay. And oh, by the way, you can add a prepay for you're going to keep this for a little while. All right, let's bump up the prepay, bring down the rate. So these are all the little triggers that a good rep is going to help you with, and you're going to come up with a much better deal. And by the way, if you have a 698 FICO score, my attitude is work on that rescore. Show me that credit report. Send it to me. I'll look at it. I will be able to tell pretty quickly, but you can run it what if scenario and you can submit that loan so you could get started at a 698. And then when we get that score to a 700 or 720, I'm doing that right now with a loan. We know we're probably going to get, because they paid down some debt, we're probably going to get a 720 or 740 FICO score. So I got their pricing as is, but once we see that new score, we can reissue that credit and we will use the most current, most recent information, which is the better score, and we will adjust. We even the loan's locked already, we will still address that rate down to reflect that score. So yeah, there's some things that we can do.
Okay, that was a lot and
Yeah,
really great.
sorry.
And by the way, Robin may or may not be known for talking a lot, but this is why. It's because when you have a conversation, then you get things out of that conversation that she's able to use to help you price it better. And that's really beneficial for the borrowers. So we have somebody who's asking to clarify. Yes, the highest score, not the highest middle score. The highest score is what they
No, no, no,
use.
no, no. We use the
Yes.
Highest
highest
middle score.
borrower's middle score.
Oh,
The
shoot.
highest
Oh,
borrower's,
thank you.
yes.
Oh,
Thank you.
God. Thank God we clarified because I was confused. Good grief.
The
Okay.
highest
Thank you
borrower
to
score.
Dirk who caught that. And thank you for clarifying because I was wrong. All right. So somebody is asking whether ACRA is doing DSCR loans on non-warrantable condos. What would your answer to that be?
Yes. Yes, as a matter of fact, we get a lot of probably a disproportionate number of condos, especially here in California for obvious reasons that I won't say. But and part of the reason for that is not only will we do condos on a DSCR loan, but we will do them. We could do a short-term rental condo. We can do an I-10 condo. We can do an I-10 short-term rental condo, DSCR rural. Like we can stack it, right? But I definitely think that the condos are coming to us because another thing that you want to look at a lender is what does their condo survey look like? Our condo survey, and people have come to know this about us. We have I think it's an 8 or 9 question condo questionnaire. Unless you're in Florida, then there's extra Florida questions. Sorry, Florida. But if you, all the other states, we have a 8 or 9 question condo questionnaire, and provided that they don't answer something in that questionnaire that's going to spur an additional question, like if they say we've got litigation, then we may ask for more details. But if they answer those questions the way that we would like to see them, no further questions. One of the things we don't even ask for on the questionnaires, we don't ask for reserves. We don't ask, we don't ask the
What?
question, we don't ask for reserves. We don't ask the question, hey, are the balconies and the units getting redone? We don't ask those questions. And so we don't go looking for
Wow.
questions that we don't, that, if they come to our attention, then we need to ask deeper questions. Obviously, like, for example, I can do a loan that's in litigation. It's fine. It depends on what the litigation is. A lot of non-QM lenders will, but always ask, don't assume. And by the way, there might be something about the condo complex that makes it a non-warrantable condo, which is kind of a hefty ad, loan level price adjuster wise. And if it's not something that we care about, that we ask about on our questionnaires, but would have for Fannie Freddie made it a non-warrantable condo, then then we don't necessarily always call it a non-warrantable condo if it's not a non-warrantable condo to us. And that's not just
Wow.
ease of execution, that's lower pricing, definitely.
Wow.
That's interesting.
Yeah.
In that's interesting.
Yeah, no.
Okay, so we have a question here. Can you do an I-10 DSCR on a 6-unit commercial in California?
Everything but the 6 unit. And I will tell you about the units. So someone did ask in the chat, I saw it come up, what types of properties do we do? We at ACRA, we do, and most non-QM lenders do generally what's called residential loans. Now, we will go 1 to 4 units. Some do 5 to 10. We
Hmm.
might do that in the near future. Stay tuned. Not, we're looking into that. But what we will do, for example, is we'll do a 1 to 4 unit, but they can have ADUs. So I can do a single family residence with 4 ADUs. Now that total number can go up to 5. So you can have a 3 unit with 2 ADUs or a 1 unit with 4 ADUs, as long as the number of doors don't exceed 5, 5 separate livable units. That's it. Speaking of livable units, we can also, which is crazy to me, anyway, I can tell you the story, but I did a deal where we used room rents on to qualify. And it was crazy to me. You'll love this. We are in the Bay Area. You'll love this around the country.
Yep.
They bought a $1.17 million house. Take a guess what they were getting from room rents from the house. In Section 8, two of them
2,500
were
bucks.
two of them are Section 8
I
per
win I
room.
win 2,500. What do you got, Kevin? Where is it? What place?
It was in San Rafael.
How it fell. Room
What did
rent.
Section 8 pay per room?
I'm gonna guess.
$2,800 a month, I
I
think
was
it was.
close.
It was
2,500.
like,
That's
yeah, it was like 2,800 a month. And I think it had
crazy.
been 25 and Wednesday 28. And so they had 3 different rooms. And one of the rooms they were renting out, I think they had like flight attendants or something coming in and out. They were getting 3,600 for that. So they were getting like over $9,000 for a single family, and it was like 1950, 60 style single family house on a nice little
Well,
hill.
hang on.
But yeah.
How did you do this? I mean, were they purchasing and you just accepted a lease agreement for a
No,
room,
no,
or
no,
did
no.
they have a
This was
history, or how did you
they
document it?
They did have a history. I did provide evidence of the leases that they were getting from Section 8. I provided evidence of that he was collecting it. So it's always important, to collect those, I'm not saying we can't get around it, but we really, really, really want to see, especially if we're using higher than the market rent, we're going to want to see proof of that. So I don't care if they're like, oh, I take cash. Well, guess what? For the next 2 months, you're going to put it in the bank. You're going to get something that we can track. Right. You're going to get them to get them. And I've had clients that
Okay.
did that. They just said, look, for the next 2 months, I'm going to force you to go and buy a money order. And that's understandable. Some of these tenants don't have checking accounts, right? So they actually have to pay more money and make a bigger effort, and the landlord will have to do it. But give me evidence of that for 2 months, and that they're collecting that actually. It's that we don't just have a lease, we know that they're actually actively collecting it. So yeah.
So you said 2 months a couple of times. So for you to prove the rent, you want 2 months history,
Yeah, it used to be 3 months.
correct?
We just lowered it to 2, which is crazy because, I just saw my boss just shared someone that was talking about how non-QM is like tightening down a little bit on their guidelines. I'm not feeling that at all over here. We have a new credit team. We're getting new updates monthly now. And yeah, we used to ask, that's one example of it. We used to ask for 3 months. It can become a little cumbersome. A lot of times we made exceptions for it anyway. We're like, look, 2 months is good, right? In California, I don't know if people around the country realize this, but at the end of the leases, the lease
Month
just
to month.
keeps going. It just
It
goes
just
to a month to month
rolls.
automatically. We don't update leases here. So we made some concessions around that. In that case, I showed a whole 6 month history just to say, hey, look, sure, here. And we got the exception to do that. So that's just an example of how we might be flexible in those situations.
So I think we talked about this recently, but Kevin just had a situation on one of his, it was a conventional loan, right, Kevin? And at the last minute, this one particular investor came back and wanted to prove that the tenants were paying their rents. and they
Oh
weren't,
yeah.
or they hadn't been, and it
Oh
almost
yeah.
blew the deal. So yeah, be aware of that, guys.
Yeah,
That was something.
we do need the lease. We need a copy of the lease, but if you're going to use the market rent, I don't have to prove it, right?
Yeah.
So if the 1007 rent would qualify, we're good. We're golden. And if
Yeah.
it's
Mine was
Yeah.
paid pay for at Citibank, and they wanted the last two rent received, and I'm like, okay, well, they're missing. No.
Again, that's conventional. And I just want to put a plug in for those of you who are thinking that conventional is always cheaper than non-QM. You are incorrect in certain situations.
Yeah.
It is, I always
The
price
rates are
them next to
decent.
it. Yes. I always price them side by side to see which one is better. And if they
yeah.
fit into, if one's better, then great, go that way. But sometimes
And I'm also a
there
fan of
is,
the 1 year prepay because if you got
yep,
a 6 month clawback, you might
yep,
as well just add 6 more months to that. Make sure you don't get your your commission pulled back from you.
yep.
Not to get off of non-Q, well, it wouldn't matter if it's a DSCR or regular. That is something we're talking about early payoffs that you're discussing, which is in some lenders. I've worked for a lender. Oh, I will not even mention the name because I love the people, but I had a lender that my client did a borrower paid comp and they only charged 15 grand for a loan that was, I don't know, someone could do the reverse math on me for this. I think it was a $2.7 million loan or 3.7, something like that. And I was at a lender that charged this is not here. They charged a early payoff even though it was borrower paid rate. And they sent me an
I've heard
email
of
a
that.
week before Christmas and asked me to call my loan officer who only charged 15 grand charged 15 grand 6 months ago, probably all
Yeah.
spent, and asked me to ask them for $31,000 for an early payoff that happened 1 week early. And I'm like, holy hell, one, why couldn't we tell them, alert somebody somewhere when that payoff is ordered? And yeah, so the one thing I love about ACRA lending that gives me a lot of flexibility, and it does come into play on a DSCR loan. So let's think about this. Kevin believes, and Audrey might also, that our rates are going to potentially go down. When the rates start going down, people start wanting to do lender paid. Why is that? You may not keep this loan for more than a year and a half, right? So they don't want to pay a lot of money up front, which a lot of 90% of the non-QM loans that I do had generally been a borrower paid comp. So when rates are good, it's borrower paid all the way. You want to lock in. When I always say when the rates are low, and you think they're as low as they're going to be, that's when you do want to pay up front. That's when you want to do the borrower paid because you're locking in a really low rate. When the rates are high and you think that they're going to come down, a lot of times people want to do a lender paid comp. But if you're doing a DSCR and that compensation dictates whether or not the property cash flows or not, two things that I can do that can help that. One, I can allow you, speaking of I can allow you to do a borrower paid comp. The borrower can get up to 1 point credit. So you can price it at 101. The borrower will get a 1 point credit. You still charge your 1.5, Kevin, and your borrower has to pay the 1.5, but they're going to get one lender credit and they can use that money. Not all lenders allow that. Money could go to anything, including you. A lot of other lenders may say it
Yeah,
can go
they
to
won't
any
let you do it.
non-you closing costs. We allow that to go to you. So that's one, and we do not charge an early payoff on a borrower paid comp. Now, the other place that that can come into play is we'll go back to the non-TRID things. I said that there was things you can do on non-TRID. One, you can lend in 39 states plus any state that allows you to do a loan on an investment property, a business purpose loan without a license, we will allow. But the other thing that's non-TRID, a lot of those states allow referral fees. So you can pay a referral fee to a referring real estate agent, believe it or not. The other thing you can do, which comes into play when it comes to qualifying, is you can split comp front and back, right? So remember, I might want to get as much credit as I can because I think I might refinance in a year because I think a year from now the rates will be a lot better. So I don't want to spend a lot of money up front for a loan I'm keeping 12 or 15 months. But I can't put a whole lender paid compensation into the rate, otherwise I won't qualify. So this is where splitting comp matters. We can have your compensation paid partly upfront and partly in the back. We could do a lender paid comp. You could get some front and some back, only on the business purpose loans, only on the non-trade loans, but it gives you that flexibility. So maybe you can get, if Kevin wants 1.5, maybe we can add a half to the rate to get 1 point credit. And then the borrower can come in with a half, and Kevin gets paid. The borrower has like a little bit of a hedge against, you know, refinancing it, and they still have a decent rate, and they can qualify, and that property cash flows.
So, Robin, you said something interesting
Okay,
about the
so
referral fees.
what,
And I just looked up on the list. There's actually only one, two, three, four, 5 states that do not allow you to pay a real estate agent a referral fee, which totally goes against what I would have thought. But
It's
this is on a
well,
most of them
DSCR
do.
loan. On a
well, we
DSCR loan, because it's not their primary residence, most states will allow you to pay a real estate agent referral fee. Now, do you pay that out through escrow? And you guys see the referral fee?
I think that we can. But I think generally we try not to. But I think there's ways to put it on. I mean, this is a question that I would post to my funding manager and make sure that we do it the way you want to. We
Yeah.
decide these things up front and we make sure. Speaking of which, if we ever do need an exception, I get those all answered. We're really pretty good about getting both pricing and exception questions answered same day, if not very next day, depending what time of day I put it in. They don't leave for the day unless they answer those generally. Sometimes it might take the overnight, but I get these things taken care of up front. So any of these little details you want to tell your rep up front so we can get them all cleared, and the file slides through once it comes in, flies through.
okay. So Kevin, so first of all, we're going to run out of time, and there's a few other questions we want to get through before
Okay.
we do. So Hank, but first, Kevin, weren't you saying the other day that business purpose loans, the business loans, those are subject to RESPA? So how are those subject to RESPA, but yet this would be okay? How does that work? Do you know?
Uh, um,
Quick,
I
we are going to
don't
run
quite
out of
understand the
time.
question.
Well, so when you're selling a business, you can't have referral fees, you said, right?
Oh, for selling a
Buying or
business.
selling a
Yeah,
business, that's a business purpose
yeah,
loan. Yes.
yeah.
So why can you do it there, but you can't,
I
or you
don't
can't
know.
do it anyway? All right. Okay, we'll take a dive into RESPA another day. 3 people will show up, and then we'll talk about it at length. I okay. So a couple of things quickly. So Robin, these are quick answers. Ready?
Okay. Got it.
Fourplex on the same lot as an SFR. Yes or no? Yes or no?
I don't know. I'd have to ask about that one because I know if it was one of them was
Okay.
an AD, we could do it. So I think that's a 5 unit. I think that would be probably
Okay.
constituted as a five
So
unit, but
You should
but
buy
call
that
me.
lot, subdivide it, and then
Call
sell.
me. There's
Yeah,
call me right there.
yeah.
I
Buy the
was just
property
gonna
with the
say,
four
call
units in
Robin.
one lot, subdivide it, and then increase the
It
value
sounds
of the
like a
house.
5 unit though. Okay, next. What's the next one?
Kevin, we're not talking about a big construction project. We're talking about can you do it? Yes or no? You guys are terrible at yes or no. Okay, here we
I'm
go.
trying.
So here's another one. What?
I'm trying. Let's
Um,
go.
okay, so I know that it's hard to do yes or no in our business. It's always it depends, right? Somebody asked if you can use another lender's condo cert. Yes or no?
Yes, as long as it matches. And actually, I got this question the other day. Can you take our name off the top and the bottom? As long as all the questions are the same and they're there, or they answer the same exact questions, yes. Now, when I wouldn't want to use that condo cert is when they ask a question that is more information than we need, and might hurt
Right.
you. I would say
That's right.
no. But also that, speaking of other lenders, we allow you to bring us one. You can order appraisals from day one on the DSCR loans from any lender. We have one, and ask me about it. We have one AMC we don't like, but everybody else is approved. And so pretty much anyone that you want to order that from. And we take transfer appraisals without a transfer letter. And if you do get a transfer and a change needs to be done like a 442, a lot of times we could get away without the 442. We could just use pictures from the borrower and or the realtor or even licensed contractor bids and things like that. But if we do actually need to do a 442, we can also have another appraiser go out and do it. So that's just another way we're easier. So go ahead.
Oh, that's interesting. That's
Yeah.
really interesting. Okay, we have a question from our friend Michael Simmons, who we love that
Hi,
he,
Michael.
yeah,
We
he's
like him a lot.
asking, is ACRA going to require appraisals after November 2nd to be on the UAD 3.6 format, even though you don't sell to the GSEs? Yes or no? Or do you know?
Okay,
I,
Michael, call me later. I have no idea.
Okay, fair enough. All right. I mean, November
Probably
2nd
not.
is
Probably
so
not.
far away,
Yeah.
right?
Call me about
Let's,
that on November 1st.
oh, great. Well, why wait, right? Dirk is saying he can do 5 to 8 units. He said he'll
There
send
you
you
go.
the 600 credit scores and you can send your 5 to 8 units to him.
Well,
So there's
well,
that.
Dirk, be nice to Audrey and Kevin, and maybe they'll have you on next time.
Okay, so I wondered whether you are taking Vantage scores or FICO 10T scores. When you guys were talking about originally, you were talking about which credit score model. I thought that's where you're going with that, but it
I
wasn't.
don't
So,
know. I mean, I know that we use the broker's credit if you provide it for it. Here's an interesting thing. If you don't provide it, we can pull the credit for you, by the way. And we don't charge
really,
anybody. Yeah. Yeah.
what?
We'll do that. You just run the loan through and you don't upload your credit. So we can take your credit. I don't know if we have Advantage Shores. If anyone from Acra's on, you have to know the answer to that. You can. But yeah. Um, yeah, I don't know exactly. Alex Smith says we do not. We do not
Oh,
we do not take
Alex
the
Smith?
Vantage score, I guess. Hi,
Okay,
yeah.
no Vantage. All right. Well, I
Thanks,
mean, there are
Alex.
a few lenders. I don't know if I'm so on the, I think the jury's out on whether that matters or not yet. Maybe it will. But actually what does matter in that is the way they're using trended data is going to be different, and so like the whole rapid rescore thing is not going to work as well once we get to those FICO scoring models. So anyway, that's something, and then
The
we
current
have like,
plan is to accept both and new appraisals for at least a while, subject to change, of course. And I
okay,
accept
great.
both. Yeah, yeah, for the appraisals.
Oh, great.
Yeah,
Thanks, Alex. Hey,
yeah.
it's good to have backup on here. We appreciate that. That's
I didn't know
awesome.
he was on. Thanks, Alex. Appreciate it. Go ahead.
That's wonderful. Yeah, they're making sure that you're answering the questions, which, you know what, it's, I like it when there's a company that's a team and everyone's, yeah, supporting everyone. Okay, I just want to take a quick minute, like that's all we have really, and talk about layering, because layering is a big deal in non-QM, so you can use different types of income. And
Oh, yeah, for
again,
sure.
we took that whole time and just talked about DSCR, but talk about how you can take different quite different kinds of, you can do a P&L or you can do
Yep.
asset. You take that.
Yeah. So I
Go,
actually did
go,
a
Ron,
loan. I
go.
got a loan approved and for with all kinds of exceptions, but it is not an exception to layer income. So I can layer multiple, and if you have multiple businesses, we can have multiple, a separate bank account for each distinct business. There's limits
Oh,
to that,
wow.
but check with me. I think it's three businesses, but talk to us. And generally that's enough if they've got three businesses. And we can also layer that with asset depletion. We can layer that with retirement income. I've done all of the above. And speaking of the asset qualification, this is something slightly different that you might want to tell your realtors about. We have a loan that if you have enough money after close to pay off that loan tomorrow, you're pretty much qualified. Again,
Mm,
decent FICO score, or
mm.
relatively not a bad FICO score, let's put it that way, decent credit. But if you have decent credit, I did a loan in lieu of having to do, I had a client that could not sell her primary residence yet for tax reasons. And they fell in love with a retirement house. So they had a $1.5 million loan on a $3.5 million primary residence. They wanted to buy a 2.8 property up in wine country. Now, we didn't bat an eye because of the fact that it was less expensive. It's wine country, they're retirement age, no notes, right? We didn't have a problem with that. And they had just under 3 million. I think we just did an ad for this on our LinkedIn, which they didn't have 4 million. They had just under 3 million. They were buying 2.8. And all you need to have is the closing costs, by the way, could be paid by the seller. right?
Yep.
So you don't even need closing costs. And if you're putting 25% down, you don't even need reserves. So the way I tell my client is, you want to buy a $2.8 million house and you can show me 2 months of a statement that you've had $2.8 million sitting around somewhere. And oh, by the way, that can be in an investment account. We'll use 100% of that. Then you're closed. I had that TRID owner occupied purchase done in 9 days, two docs ready for her to sign. She made us wait a couple more days, to be honest, but we were ready to close
Of
it that
course.
day. And yeah, of course. But she killed my story. But the other beautiful part of that is was she's kind of semi-retired luxury home flipper. So she was going to probably want to do some work for her property. So she couldn't list it for 6 months. But let's say, for example, she wanted to do a major remodel on her departing residence to maximize the value before she sold. If she had done a bridge loan, she would have had to pay major points up front. She would have had a higher interest rate. She would have had to get rid of that property within a period of time, maybe 11 or 12 months or whatever it is. And she would have had to refinance her other property when
Yep.
that happened. This happened back in last August. I got her a rate at 6.75. She paid an eighth and it was 6.75. She paid an eighth and it was lender paid comp at 1.5. So she had a 30-year mortgage. I think it was an interest only at 6.75 on a 2 point. I think she ended up putting some extra money down. So it was like $2.2 million loan or something on a $2.8 million purchase. And that could not have been done, by the way, asset depletion standard. We didn't look at any other debt. We didn't care about the $1.5 million mortgage she had outstanding on her departing residence. We didn't care about that. And we didn't look at any
Yeah.
car loans or auto loans or investment properties that she had. None of that mattered. That's why we got it done well. Thanks, Derek.
Okay. So quickly, was that owner occupied second home or investment property? It was owner occupied?
This was in it's called ATR in full, and it basically means if you can show us the money to pay off the loan, you're pretty much
But
qualified.
owner
There's some
occupied or non-owner?
It
On
can be
on owner
it's
occupied?
owner occupied or second home. There's a caveat to
Oh,
that. The second home you have to be able to cover for both. So had we knew she was moving into it, she was retiring. So this was her forever home. But had this been a second home, then we would have made her have the money to cover the mortgage, the $2.2 million mortgage plus the down payment, plus the 1.5 million for her departing residence. But yeah, she'd been looking for a long time in Napa and or it was in St. Helena, I think she ended up buying. But it was a great deal. The client could not have been happier. My broker could not have been happier, and we got it done. I couldn't have been happier because it was a nice loan and it closed quickly and it was so easy, so everyone was
yeah.
happy. Yeah.
Hallelujah. That is a beautiful story. And I'm
Thank
just
you.
going to say the icing on the cake for I was talking to Robin the other day recently, and she was waiting for a phone call from escrow broker, someone to find out whether she needed to drive loan docs to make
I'm
sure
not allowed to do that,
the
by the way. I found
client
out
signed
about
on
it.
time.
Hey,
Oh, you found
Audrey.
out, but
Oh,
you know what? You were
the president of my
willing.
company says
You
you do not want to
you
touch
were
the docs. You're
willing.
not allowed to. But I was willing, yeah. And it was not far,
Okay,
and I had
okay.
dinner plans.
But the point was she was willing to do it. I
Yeah.
mean, who does that? So Alex Smith said Robin is the best, and he works for your company. I love that. Dirk said, great job, Robin. I need my lawn mowed. So thanks for offering to do whatever it takes. So
Audrey,
Dirk,
I
if
don't know what
you'll
time
let
it is in
Robin
Italy, but
do your if Robin or Dirk, if you let Robin close your loan, then she'll mow your lawn. Okay, what did you say, Kevin?
Will
I
not.
said I don't know what time it is in Italy, but it's like the longest
It's
we've
I
ever gone.
know, I know. Here we go.
Sorry.
All right, so we are done. Well, in Italy, it is now 9:09 p.m. and I'm going to go or 9:06 p.m. I'm going to go have dinner with my family. And
Enjoy.
this was great. Robin, you did a great job. You really
You
did.
appreciate it.
And Kevin, thank you for being so prepared. And Kevin, somebody said they loved your sarcasm. I mean, I didn't even know you were being sarcastic. So that's great. Anyway,
Wait,
have a
Audrey,
wonderful
don't forget gifts for us, when you're in Italy.
Tell me,
When you're in Rome.
I was thinking about you earlier because you can get great skincare here, Robin. I know you really need that
Leather
because,
goods, leather goods. I was kidding.
leather goods. Oh my God, don't even get me
Bring some
started. All right,
fiat.
kids.
All right.
What?
Bring back a Fiat.
Yeah,
Oh my God.
or a
Okay.
handsome Italian, one of those, either one. Okay.
If you, yeah, so that there's a whole had to push the Fiat in the parking lot at the grocery store this morning to try and jump it. Yeah, that was a whole thing. Anyway, love you guys. Have a
Love you, Audrey. Thanks, guys. Thanks,
You
Kevin.
guys.
Have a good one.